Allow me now to invite the IDC CEO to come and give a few remarks as well as we start the second day, as well as invite the Minister, the Honorable Minister of Finance, to address us. Let's give him a hand, shall we now?
The Honorable Minister of Finance, Directors of the IDC Board, Chairpersons of Boards, Chief Executive Officers, Chief Finance Officers, Company Secretaries, Senior Officers, ladies and gentlemen, good morning. My task this morning is very simple. I have the rare honor of inviting my director, my shareholder, our shareholder, the Honorable Minister of Finance, Dr. Banyanga. Honorable Minister, please.
Good morning, ladies and gentlemen. Before I get into the speech, let me mention that it's been brought to my attention in passing that people are expecting a very hard speech from me. I don't know where I got this reputation from, but I do suspect that Elias Mponda is responsible for the rumor. And I want to assure you that what you will get is a very friendly speech, I hope. So members of the board and the CEO of the Industrial Development Corporation, group companies, board members and CEOs, speakers and facilitators, government officials present, staff of the IDC, ladies and gentlemen. Let me start by thanking the management of IDC for inviting me to deliver the keynote address to the third IDC Annual Group Conference. I intend to focus my address around what I think the role of IDC should be in providing the inspiration and leadership that is needed to build a vibrant group of companies made up of sustainable businesses. I have, of course, been guided by this year's theme, which is innovation and growth, making tough decisions. By inference, therefore, this theme wants us to address innovation as a key strategy that can drive growth for companies within the IDC group, but also to embrace commitment to making decisions, albeit difficult, that are needed for these businesses to continue to thrive. In the first instance, the choice of the theme is very appropriate because it speaks to the recognition that the business environment and business conditions in this country, like in many other countries, are changing very rapidly. Clearly, technological innovation is a major driver of these changes. But what it is doing is to, in a sense, redefine products that are attractive to the market, offer new market opportunities, and bring out different channels through which goods and services can be delivered. These present changes that businesses must respond to if they have to survive and let alone remain competitive. The response to this, however, cannot and should not be reactive or impulsive, but must reflect a carefully structured strategy. In short, if you do not have an innovative strategy, you will probably lack the capacity to respond to changing needs of your customers, to managing their expectations, and will not be able to meet the challenge that competitors in your line of business will present to you. Hence, you are most likely going to fail in meeting your business goals. So, ladies and gentlemen, I need to stress the point that lacking a viable business strategy that enables you to benefit from innovation is a poor choice. The force of innovation is sometimes unstoppable, and when it comes calling, it has the habit of sweeping away companies into what I like to refer to as corporate and product graveyard. Now, evidence of those who lie in this cemetery include those of you who are old enough who remember typewriters. Do you remember typewriters? Well, I heard some people say yes, but looking at you, you can't be old enough to to have seen a typewriter. Evidence of those who lie in this cemetery include typewriters and Corona. Corona was a major typewriting manufacturing company which continued to manufacture typewriters even after it was clear that with the onset of word processing, the game had changed forever. They continued to build typewriters. The demise of many products in the recent past is fairly long and includes the once upon glamorous airline ticket. Do you remember those airline tickets? Yeah, those nice looking things. There were companies that survived purely on producing those airline tickets. And of course, there were travelers' checks, just to name a few. Now, the lesson here is that the failure to evolve an appropriate business strategy, which embraces innovation, may not only slow down growth of a company, but it can destroy its business. Now, let me put the importance of innovative strategy within the context of the banking industry, which is pertinent to the banking institutions that are within the group and also in this room. The last decade has seen drastic changes in the way banking business is conducted. We have transitioned from customers conduct virtually any banking transaction, whether it be withdrawing cash or transferring funds within the branch, to a point where ATMs, point of sale terminals, and indeed internet banking have opened up new ways in which customers and banks can now interact with each other. With the capacity to now access 24-hour banking services, customers' visit to banks are becoming less frequent, and thereby redefining bank-customer relationship in a different way from what we have seen before. I heard somebody last week complaining that there's a problem in this country. As evidence of that problem, there are no people going to banks anymore. But maybe because technology has changed. Whereas before you needed to go to the bank, now I don't need to see Herman Kasekendi at all for the next two months, but I'll still be able to get my money. So that's how far things have changed. But the fact of having fewer customers coming into the bank frees up resources and provides an opportunity for designing new products by banks. And that's the challenge that now you banks have to face. Further, in this environment, opportunities for banks in the group to become competitive using the digital platform are almost endless. It is reasonable, I think, to expect them to use the innovative digital platform as a launch pad for achieving a bigger market share, because it will give them with an edge over their competition. The experience of M-Pesa's mobile money application in Kenya, which attracts 26 million customers, and the PayStack system in Nigeria, which enables users to make payments using the social media, and the social media which you generally use to spread gossip, can now be used as a way of making payment and expanding business opportunities. In other countries, banks are delivering innovation or innovative solutions by partnering with data and analytical fintechs to underwrite loans, or with communication companies to issue small loans. All these are opportunities that innovation has brought to bear on the profitability of banks. And I'd like to see our banks becoming champions of innovation in banking. So, Mr. CEO, the banks that are in here that belong to your group, I'm throwing to them a challenge. Become the champions. Become the champions of innovation. Now, the media houses in this room are another example of companies which exist in an environment where failure to embrace technological innovation poses a threat to their very survival as businesses. The speed at which news is transmitted these days is so fast that by the time you print your newspaper with stories of what happened yesterday, the social media platform has rendered the information redundant. The idea that you can profitably run a newspaper business in the traditional way requires to be placed under the microscope. And I do hope you guys have microscopes to do that with. Advances in information technology are such that they are opening up new profitable avenues and different channels for delivering news. In a sense, the concept of what is news has also changed. And to be successful going forward, the media business will have to redefine the needs of their readership and provide solutions that are responsive to these needs. So I want to invite the management of IDC, working together with the management of the media houses, to tackle the investment and capacity needs of these companies within the framework of a comprehensive strategy that will transform them into highly innovative and profitable enterprises, which currently they are struggling to be. It would seem then that as a basic minimum requirement, IDC ought to begin to inculcate in all its companies a culture of innovation reflected in clear business strategies. Without this, it is highly likely that the current portfolios of loss-making or poorly performing companies will increase and not reduce as we all like to see. And this should not be surprising because in the absence of strategy, identifying a series of activities in response to challenges becomes the default substitute for business strategy. However, strategy is much more than just selecting activities. Strategy is about creating vision for business that will ensure the future prosperity of that business. And do realize that it's not possible for, nor is it even desirable, that IDC formulates a single business strategy for all the companies in the group on account of their differences in size and business focus. But irrespective of size, each company must be required to formulate a viable strategic plan with achievable but ambitious goals on which management performance can be measured and the board's stewardship of the company assessed. All this is necessary because government expects, now this is the hard part, government expects all commercial enterprises that it invests in to be profitable so that they can give a return to the Zambian people. However, the situation with state-owned enterprises under IDC is currently a mixed bag. On the positive side, we have seen a reduction in the number of loss-making enterprises since they were transferred to IDC. In addition, majority of the companies are current with their financials for 2018, in contrast to 3 years ago when a number of these firms were behind for as long as 10 years. This marks a remarkable improvement in corporate governance. In addition, the number of financially independent companies in the group has gone up. In 2018, 12 companies recorded profit, from which dividends amounting to 123 million were paid into the treasury. With the benefit of knowledge of where we are coming from, these results are a step in the right direction, and the leadership behind these achievements deserve our commendation. But if we consider the fact that the consolidated balance sheet of IDC is around $6 billion, seven more than I thought, $7 billion, the number of companies paying dividends and the level of dividends declared is clearly less than satisfactory. So, while there is some progress, there's a lot more work that needs to be done. I'd like to now focus on the second half of our conference theme, which is making tough decisions. A number of companies in the IDC portfolio are known to have bloated workforce, which is responsible for inflated costs of their goods and services, and which also undermines the productivity and competitiveness of these firms. Other companies within the group have extremely high staff cost to revenue ratios, which remains a constant threat to their financial health. We, of course, cannot turn a blind eye to these defects, which IDC and the respective management of the companies in question must deal with, within the spirit of making tough decisions that may be deemed necessary. I want, therefore, to hazard a guess that going forward, companies that need to be downsized in order for them to become profitable members of the IDC group of companies will indeed be downsized. Clearly, no one wants to see jobs cut, but if the number of employees is the reason why a company is dying, allowing the company to die is not a rational decision. I want also to believe that, inspired by the same spirit, the operations of IDC and its companies must be driven by commitment to cost containment and avoidance of waste. It is necessary that we guard against the temptation to standardize remuneration packages across all companies in the group. What employees in a company get paid must be calculated based on the productivity and profitability of that company, and not on what staff in another company get paid. Okay, you know, this guy, the CEO of company X, drives a Mercedes-Benz. Why should I be driving a Toyota? That's not the way it works. When remuneration packages of companies cannot be sustained by the business, IDC should be alive to this challenge and be prepared to prevent the company being brought down by staff conditions of service that do not reflect the company's performance. So that's within the spirit of making tough decisions, yes? Good. Now, another aspect relating to decision making touches on the need to build synergies among companies within the group as a way of improving the profitability of the individual companies that make up the group. I have already belabored the point that IDC must ensure that the operations of the companies under the group are guided by clearly defined strategic objectives. I think, though, that management of IDC group of companies must act as if they believe that they belong to the same group of companies. It is not enough to be members of the same group in name only. Companies must act the part by doing business with each other. IDC is a group which includes under its portfolio companies in banking, insurance, farming, media, telecommunication, manufacturing, and so on. One would naturally expect a lot of business transactions taking place among members of the group, since they bring to the market a diversity of products and services that each may want from each other. That this may not be the case now, or that this may not be happening to the extent that it should be or would like it to be, is a problem in itself. I don't know how many of you are not in insurance, who are not in insurance business, who insure with the insurance companies within your company, within your group of companies. I don't know. But that's the point I'm trying to make here. So where, for instance, a company prefers to give business to a group member's competitor in the absence of a compelling reason, the message that this sends is that the levels of confidence among group members in each other is low. In other words, it says that we are skeptical of each other's capacity to deliver acceptable levels of products and services. While this may very well be true in some circumstances, it does not help neither the business nor the reputation of companies within the group. This situation, of course, needs to change, but a number of tough decisions may need to be made at the group level and at the individual company level in order to make intra-group company businesses more desirable. Personally, I would like to see more business transactions taking place among companies within the group, but clearly that is subject to the caveat that transactions conducted make business sense for the companies that are doing them, and that doing so does not become a strategy for supporting companies that may not be capable of giving value for money service. Ladies and gentlemen, let me end by thanking each and every one of you for the work that you are doing at the group level and at the company level. I do realize that the business environment is sometimes hostile and extremely challenging. But be assured that we as government will stand by you as you implement the necessary reforms that are needed to make your companies sustainable. Let me stress that we'll support you as you implement the necessary reforms that will transform your companies. And the emphasis there is deliberate because there is a need for a number of companies within this group to be reformed in a very substantive way. Now, as a measure of gratitude and respect for your contribution, I shall be delighted to present the IDC annual awards this evening to deserving companies whose efforts have not gone unnoticed. I also want to acknowledge the distinguished speakers and panelists for sharing with us their expertise and experiences in various aspects of corporate management. I particularly want to mention Ezekiel Ario for sharing with us the experience of Israel in the areas of innovation and creativity. As you might know, Israel is probably the most innovative place in the world after Silicon Valley. And I trust that you found listening to Mr. Ario a fulfilling experience. I also do believe that the session by Henry Sakala was useful in bringing out the intricacies of managing state-owned enterprises and hopefully making the point that they can be made by those of us in this room to be as efficient and productive as private companies. Ladies and gentlemen, at this moment, history calls upon us to play our part in contributing to building a strong economy in our country. Let us accept the challenge with a firm spirit of commitment by working tirelessly in transforming the IDC group of companies into strong, wealth-generating entities that can create value for the Zambian people and contribute to the reduction of poverty in our country. I thank you all.